we do have a question from Living Water Quilter online. The question is, I received an inheritance. What are your thoughts about using some of it to pay a large sum towards mortgage principal instead of letting it sit in a low interest savings account?
Okay, so there's a couple of ways to take a look at that. I'm going to put that on the screen right now. We have this $400,000 mortgage on here, so we'll just use that as our example. Okay,
Okay.
so we got a $400,000 mortgage here, and we're going to put in something that is going to be, let's say, 3.75. Okay, so we're going to put in interest rate of 3.75 because interest rates are climbing. I want to tell you, if you're worried about interest rates climbing, don't worry about it because it's actually using this system and learning how to read an amortization schedule and then letting our program give you a track to run on, letting you know how much money to move, what day to move it on, what month to move it in, and which loan to attack. And you'll save thousands of dollars in interest if we guide you. It is actually easier and cheaper to pay off the loan faster with a slightly higher interest rate than a slightly lower one. The lower the interest rate, the harder it is to pay the loan off early and cheaper. I'm just telling you. All right. So here's what we got: $400,000 at 3.75. Okay. Now, you could, if you wanted, you could take some of that money of your inheritance. And the reason why I chose this is because we have a situation not too long ago. One of my clients had a $400,000 mortgage and he has an extra $100,000. So he says, well, if I do this, I can put my $400,000 and 360 months. All right, there we go. And let's see, we're going to use 3.62 instead. Okay, 3.62. All right. Now I could take this information and I could put $100,000 down as a down payment. So I can have a $300,000 mortgage. So we're going to duplicate this tab. Okay. And say, okay, so I can get the $400,000 loan, or I can get a $300,000 loan, same interest rate, same 30 years. Okay, delete that. I'm going to delete this payment. All right, so now we have a new payment. Now we're going to compare the $300,000 loan to the $400,000 loan. So we got $400,000 here, and the payment is 1823.08. So if I put $100,000 down, my payment is 1367.31. So 1823 versus 1367. So almost $500 difference. Okay. Less than $500 difference, but between $400 and $500. So that's kind of where we are. So right now, if I put $100,000 down, it's actually going to be cheaper for me to make this payment. Now, let's go down to what we see here as our summary. Okay. In the summary, the bank wants $256,000 interest on the $400,000 loan, which makes it 64% of what we borrowed. On this other one, we're going to make that just as big. All right. Now we're looking at $192,000 in interest instead of the $256,000. So Don, why wouldn't I want to put the down payment down? So I don't do down payments. I don't do large down payments. Give me the whole mortgage. The $400,000 is the better way to go. This is what I told my client. This is why would I do that? I'm going to save a ton of interest over the 30-year term. I said, well, if we take this $400,000 mortgage and you make your first payment, where is your $100,000? He says, well, my $100,000 is in the bank. I said, well, could you apply that $100,000 to principal on this $400,000 loan after you get it, after you close, not before, but after you close? Look what happens. We're going to go down to $100,000 on our amortization schedule here, the cumulative principal. And at $100,000, we take off 133 payments right now and save $141,000 $300,000 in interest right away. And look here, folks, we're still at $300,000, but not for 30 years. If we take that off, we take off 133 payments, put our 133 divided by 12, we instantly take off 11 years. 11.08 years. 11 years is gone. So if we put it as a down payment, we start at payment number 1 on our $300,000. If we use that $100,000 as a prepayment instead, we still have a $300,000 loan, but we instantly eliminate 11 years worth of payments we have to make. So, folks, how would you like to use your money, as a down payment or as a prepayment? Never, ever, 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 ever put a large down payment on a mortgage or a car. Never. Use your funds strategically as prepayments, and we will guide you as to how to do that to save the most amount of money in interest. I want to thank you, Living Water Quilter, for your question today.
But Don has some valuable information that can contribute to the quality of a person's life, and it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L. method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.